Okay, so for today's video, I'm going to be going over a new concept. It's called PO3, the power of 3, also known as the AMD model, which stands for accumulation, manipulation, and distribution. Now, I'm going to be going over the first main parts to this. There may be a second video to this in the future. But yeah, I'm just going to be going over the simple parts to it today and the key components of what you're going to be looking for. Okay, so as you can see here, I've drawn up a quick graph and I've aligned some of the main components of this model on the market. Now, as you can see, these three zones here are all doing different things. Here's your accumulation, here's your manipulation, and here's your distribution. Now, this sort of correlates to the previous video I made on open high low close and open low high close. This is exactly how I trade that concept in itself. I use the AMD and match it with the open high low close concept. So as you can see here, I've got another drawn out thing. So this is the exact structure that I look for a bullish AMD model or a bullish PO3 model. So I'm just going to be talking through what we've got right here. So I'm just going to be explaining the key components to this. So as you can see here, we have a zone of accumulation. As you can see, notice how price is just chopping around. It's got no clear direction at the moment. And then we come down with a big manipulation leg to the downside to sweep our higher time frame liquidity, which is resting down here. Now, another thing to notice is we have an intermediate term high right here. This high inside of a fair value gap, and this is on the hourly time frame. So this is a very strong draw on liquidity. And I'm going to be looking for the market to take this out. And as you can see, we have traded up to take out this zone of liquidity up here. So in simple terms, accumulation, manipulation, distribution to the upside. So every time I'm looking for this to happen, I'm just going to draw out what I'm looking for. Okay, so right here I've drawn out a bit of market structure. So we have a bullish fair value gap right here, and we have an intermediate term low, a low resting inside of a fair value gap. So what I'd be looking for, so we've got some higher time frame liquidity resting up here. This is going to be my target. Okay, so this is going to be my target. What I'd be looking for market open is I'd be looking for price to accumulate around this zone, and then as soon as we get our manipulation lower to tap into this fair value gap, take out this intermediate term low, that is exactly when I'm going to be looking to take my trade higher. So I'm going to be looking for an inversion model around here after price has done its accumulation, and we've taken our manipulation to the downside, sweeping out an obvious low, tapping into an obvious inefficiency, taking price higher. And this is exactly how I trade it. I do have some trade recaps in my Discord, and I'm going to be going over them momentarily, but for now I'm just going to be going over this right here. So as you can see, exactly what I just drew out. We have our accumulation near our higher time frame zone of liquidity, and then we have our obvious manipulation lower to take this out. What do we have right here? An inversion fair value gap. So I know this is on the hourly time frame. I personally wouldn't have taken this on the hourly time frame. I trade this on the lower time frames, but this is just a very good demonstration of how you trade it. So we have our inversion here after our sweep, and we did tap into a fair value gap. However, it's very far to the left, so I'm not going to draw it out. So after tapping into this on the lower time frames, I'd be entering off the inversion. My stop loss would be below the low here, and I'd be targeting this intermediate term high up here. And just like that, you would have had another winning trade. So that is exactly how I trade using the accumulation, manipulation, distribution, aka the power of 3. Now, there is an indicator that I use to trade this, and I showed this on my previous video of open high low close. It is this indicator right here. High time frame, power of 3 by 2 degrees. This is the indicator I use. It has great features. I use it on the 4-hour time frame, so this one right here. Now I use this concept, pair it up with open, high, low, close. So I'm looking for the open of the 4-hour candle to to consolidate, and then I'm looking for the bottom wick to be the manipulation lower. I went over that in my previous video, and then I'm looking for the candle to flip bullish, creating the body higher, and then closing wherever it wants to. Okay, so now I've gone over this, I'm going to find some demonstrations in the market of how I've used this, and then I'm going to be going over some of the trades that I've got in my Discord where I have used this concept. Okay, so right here I have found another accumulation, manipulation, distribution model, PO3. Right here we have a big zone of accumulation. As you can see, price just has no real objective, it's just going up, down, very fast, creating small moves inside its range. Now what we have right here is our fair value gap, so this is going to be our internal range liquidity. So we're going to be using this fair value gap for momentum to send price lower. So as you can see, we have our manipulation here, and it's taken out all the highs inside this accumulated zone, and that has given it momentum to trade lower to the downside. And what have we got here? Another intermediate term low, and this was just an absolute perfect trade to the downside. Obviously this is the hourly time frame. You'd be looking for a trade after the manipulation, trading lower. However, if this was on the lower time frame, right here you have your inversion, and here's your close of the inversion, disrespecting the fair value gap. There's your stop loss, and there is your target, and this is how I would trade it on the lower time frames. So now I'm going to be finding a couple demonstrations on the lower time frame. Okay, so right here on the 5-minute time frame, I have found a perfect PO3 model. Right here, identifying our accumulation zone. What follows after our accumulation zone? A big manipulation to the downside. Now I'm just going to find if we took out any form of liquidity. As you can see, there are lows down here, and there is a fair value gap. I'm going to scale up to the higher time frame, so I'm going to start with a 30-minute. As you can see right here, we have a 30-minute fair value gap. I'm sure there's a higher time frame fair value gap, so I'm going to go to the hourly, and there we go. So here's our hourly fair value gap. Now I'm going to be scaling back down to the 5-minute time frame where I found my accumulated zone. Now, something to notice about this zone: as soon as we've manipulated through it, we've taken out all the lows, we've tapped into a high time frame fair value gap. So that is enough to expect a distribution higher. So you're trading this distribution higher. Now this one didn't have a great move. This was on a Friday, so as you can see, volume just died out. It still did push it to the upside, but we didn't really have our volatile move, which is expected after the manipulation in the PO3 model. But the first two parts to this PO3 model were absolutely perfect: accumulation, manipulation, distribution higher. Now no real targets got hit on this. We do have a 5-minute intermediate term high here with also equal highs, so this could have been your target right here. So there's no real lower time frame entry point for me down here. Friday price action tends to be quite bad. I'm thinking of just sacking it off, not trading it anymore. As you can see, as soon as we got our manipulation on the lower time frame, we created another model. We just started accumulating here. Now we didn't manipulate lower to take out these lows, so after seeing how price just started accumulating, I wouldn't have been looking for a trade. I would be looking for an impulsive move higher after the manipulation. I'm looking for price to be clear that it's wanting to trade to the upside, and it's wanting to take out these highs up here and tap into the fair value gap. As you can see, price just is very uncertain. It started to get its move here, and then as we could just come back down, and then we did the same thing here. This is when I would have not been looking for a trade anymore, or I would have been looking for a sweep of the whole range. If we did come lower, sweep the whole range, then I'd be looking for a trade higher. However, we did not do that, so this is an invalid entry for me. However, the first two stages to this model were absolutely perfect. Okay, so now after going over this, I'm going to be finding some of my trades in my personal Discord, and I'm just going to be going over them. I'd advise everybody make a server like this on Discord or whatever you use. This is what I use to journal my trades. go over the models that I have. I will be making videos on these very shortly. This is probably going to be one of the videos that I come up with soon, the daily profiles. But yeah, anyway, I'd advise that you guys have a channel, make yourself a Discord server with all these different channels here where you can store all your information and just keep tabs on everything. So I have my pre-trades here, what I'm looking for in the market. I've got a bit of analysis, what I'm going to be looking for. This is my expectation. I want a price to run lower for then a trade higher. Right here we've got the same thing. I'll be looking for a sweep and SMT at the lows. After wanting that, this is the exact trade that I took. We have our sweep, we have our SMT at the lows, tapping into a fair value gap, order block, sending price higher. But yeah, so I'd advise everybody to make a server like this where you can journal your trades. I've been journaling my trades in this server since 2024. I don't journal every trade, sometimes I forget. I do have another server right here where I currently am teaching people as well as journaling trades. So I'm going to be going over some of them right now. Now this is in my backtesting tab. As you can see here, we have a zone of mitigation inside our 4-hour fair value gap with a higher time frame break of structure. Now if we look right here, we have a zone of accumulation. Notice how price has no real objective here. It's just going up, down, up, down, up, down, up, down. And then we get a sort of impulsive move lower to sweep the range and create a bullish SMT at the lows. Then once we get our inversion, I'm entering off the inversion and I'm targeting higher price. And that is exactly how I trade this AMD model. This right here, another trade that I took. As you can see, we've got a slight zone of accumulation here. Very slight. And then we get a big manipulation candle to the upside, sweeping out highs, sweeping out the accumulated zone, tapping it into an inefficiency. So this is enough confluences for me to look for a continuation of the trend. As you can see, the trend is bearish. We've got a manipulation higher. We've got a break of structure indicating a continuation of this trend. Here's your entry, and it sent price lower to my target. So this is another perfect trade. It also has our accumulation, our manipulation, and our distribution lower. Okay, so right here, this is going to be the last trade that I go over before I find some more demonstrations. We have our zone of accumulation here, up, down, down. So we have our zone of accumulation here. Notice how price is, it's just chopping around, doesn't really have much of an objective here. And we got our impulsive move lower. With this move lower, we created a bullish SMT here. And then we created a fair value gap. So once we pulled back into this fair value gap, we had our move higher to the intermediate term high, which also aligned with my standard deviation projection video coming on that soon. So yeah, this is a perfect demonstration. Here's your accumulation, manipulation, and distribution higher. Okay, so now I'm going to be showing this on a different time frame. So here we have gold on the daily chart. We have this zone of accumulation right here. Notice how price is creating very small moves. Just not really going anywhere, just wicking up and down, creating small bodies. Then we get a manipulation lower, tapping into this fair value gap down here. So here is our run on liquidity, internal range liquidity. After seeing this, you could be expecting the next couple of days to be bullish. We also had a doji candle right here, so this was actually a really good setup, to be honest. It's unfortunate I don't trade gold, because this would have been a perfect setup and I would have been looking for longs inside of this leg here. But yeah, as you can see, we've had our manipulation lower for our distribution higher. So for one last time, I'm going to be going over what you're going to be looking for your first zone of this model. It's going to be your accumulation. So you're looking for price to just do something like this, just chop around, up, down, up, down, up, down. You know, it can also be up like this, just as long as there's no sudden moves really in the market and it's just staying inside its range. Now, once we get our manipulation lower, taking out all the lows or the highs inside this range for a bearish one. But yeah, if we take out all the lows inside this range, we have a clear hunt on lower time frame, higher time frame liquidity, tap into a fair value gap. Then that's just extra confirmation for longs. Oh, this does work perfectly. This works really well on every time frame. However, I found the most conviction at 10 AM. wants price. So what I look for at 10 AM is I look for a zone of accumulation with an intermediate term high or low, and then I'm going to be looking for 10 AM to open. Now that is the new 4-hour candle, so I'll be waiting for that new 4-hour candle to create a manipulation, and I want this manipulation to correlate with my bias. So I want this manipulation to run higher to tap into an inefficiency, sweep liquidity, and that's going to be the top wick of my new 4-hour candle, and then I'm going to be looking for us to come lower. This is a bearish example. I'll just draw this out to make it more simple. Okay, so now I've drawn this out. This is going to be your intermediate term high. This is going to be your fair value gap. So I'm looking for our zone of accumulation just before the 10 AM candle opens, which is the new 4-hour candle, and I'm looking for our accumulation here. Now I'm looking for price to open higher, creating the top wick of the new 4-hour candle, which is another confluence for it to move lower to create the low and then close. So this is how it's correlated to open high, low, close. This would be the open of your new 4-hour candle. This would be the close of your new 4-hour candle. This would be the high and this would be the low. The low is taken out this zone of liquidity. The high is taken out this zone of liquidity. So right here, just like that, that's going to be your higher time frame 4-hour fair value gap, and this is going to be your lower time frame market structure. So I hope you can see how this aligns with the previous video that I've just made. Now this concept works really well in my opinion. I've been using this as one of my models for a long time, and I found a lot of success in using this, especially around 10 AM. If I catch a trade before 10 AM using my 2022 model, then I won't be trading later. However, if the market's just consolidating and it's got no real objective, then I'm waiting till 10 AM to see my AMD model present itself, and a lot of the time when it does present itself and it looks perfect, I catch winning trades. Okay, so I am currently in the process of making what I call a cheat sheet. So it's going to be a very small booklet with about 3 to 5 pages covering beginner concepts, and then it's going to go all the way through to concepts that I've used to make money myself personally trading in these markets. So there's going to be quite a few of them. I'm going to be putting a lot of work into these, so that it helps you guys understand the markets better. I will be releasing the link to my website in the description when it's ready to be set out. But for now, I'm just going to be posting these YouTube videos for free, so you guys get as much education from these as you can. And then I'm going to be releasing these PDFs, these cheat sheets, and I'm also going to be releasing a Discord server, and it's going to have a backtesting channel, it's going to have loads of analysis, it's going to have daily bias, live trading at some point. So yeah, I've got a lot to come. At the moment, I'm just building up these videos, making a playlist for all my students. I've just found it quite difficult recently to teach my students the same stuff over and over again. So instead of doing that, I'm just creating a YouTube playlist where everyone can come to and learn the same stuff, be on the same level, so I don't have to keep explaining myself. So yeah, after this playlist is done, I'm going to be releasing a link to my website and a link to my Discord, where there's going to be different products for sale, and there's also going to be a lot of free stuff that you can use to excel your trading and become profitable. Okay, so now, as I always do, I'm going to be going over the terms and abbreviations to keep you guys in sync with what I'm talking about. I know from past experience it can be very confusing being left behind and not knowing what these abbreviations stand for. So I always make a little list just to avoid that confusion. So you've got PO3, the power of 3, you've got AMD, accumulation, manipulation, distribution, and you've got open, high, low, close right here, and open, low, high, close. So these essentially I trade all together. PO3 and AMD is the exact same thing. It's got two different names. I personally call it the AMD model, but I know that a lot of people call it PO3. Doesn't matter which one you want to call it, it's just personal preference really. But yeah, so I use both of these and correlate them with the open high low close and open low high close. Looking for the manipulation to put in the bottom or top wick, and then the distribution to put in the body and the close. But yeah, so that is going to be everything for today's video. I hope you guys found this one useful, and you can understand it well enough to implement it into your trading, and you can find success with it just like I have. But yeah, that's going to be everything for today's video. I hope you guys enjoyed this one.